This is Kali Persall, editor of Institutional Investing in Infrastructure, here with the head of project development at CEE Group, a company of Brookfield Asset Management, to talk about the repowering of renewables. Ole, would you please just start off with a brief introduction of yourself to kick it off?
Yeah, sure. Hi, Kali. First of all, thank you very much for having us here. It's a really great pleasure talking to you. I'm Ole Jürgens, Managing Director of CEE's Project Development Division. CEE Group is an asset manager based in Hamburg, Germany, and we're specialized in investing in and operating renewable energy projects, so wind farms, solar parks, and BESS projects across Europe.
That's perfect. Thanks so much. So we're seeing more renewable energy assets like wind and solar nearing the end of their operational lives. Do you think repowering will be a key trend in European renewable investments in 2025 and beyond? And why is that?
Well, repowering is indeed emerging as a key trend in European renewables investment. This trend actually is driven by several factors that make it an attractive strategy to focus on repowering investments. And why is that? First and foremost, we need to consider the current state of the installed capacity. Germany was an early adopter of wind energy, and as a consequence, more than 21 gigawatt of installed wind energy capacity is older than 15 years, and that is about one third of current installations. This means that much of the technology currently in use is really outdated compared to the latest advancement in the field. And this rapid pace of technological innovation in renewable energy over the past decade has really led to substantial improvements in efficiency and output. And now by repowering these outdated assets, we can really leverage cutting edge technology and thereby dramatically increase not only performance, but also sustainability. And just to give you a hint for the potential, rotor diameters over about the last about 15 years have grown from about 50 meters to more than 150 meters. And hub heights have increased from about 50 meters to more than 160 meters. And finally, capacity from about 1 megawatt to more than 5 megawatts. But, of course, an increase in capacity is not a goal for itself. It is about the potential for substantial increases in power production through repowering. And by replacing older wind turbines and or solar panels with the latest technology, we can often achieve a more than fourfold increase in power production on the same site. And that's a whole different ballgame. This remarkable boost in efficiency not only enhances the economic viability of this project, but it also significantly contributes to our overall renewable energy targets without the need for additional land use. And finally, I think it's crucial to understand the challenges we all face when trying to expand renewable energy capacity through new installations, i.e. green or brownfield development. Attractive sites are becoming increasingly scarce, and that's true particularly in densely populated countries like Germany. Moreover, the process of obtaining permits for new installations has grown way more complex and time-consuming over the past 15 to 20 years. And these hurdles make repowering a really attractive alternative because by focusing on existing sites, we can work around many of these challenges while still drastically increasing our renewable energy output.
So, what makes repowering in particular attractive to institutional investors?
Powering is particularly attractive because it addresses two of institutional investors' key metrics in a very favorable way. And that two are risk and return. Let's focus on the risk perspective first. Repowering means that you can work with an existing asset, especially when compared to greenfield or brownfield development. it's not like starting from scratch. It is building upon an existing asset and make it even more valuable. There are landowners you already know and with whom you have a long-lasting and fruitful cooperation. And same is true for municipalities, right? So there is a land development plan. There's a permit. I mean, there already is a wind farm or a solar park. Actually, the general public recognizes these benefits as well. And this not only leads to an increase in regulatory support, maybe even more important is that all these local communities are already very accustomed to the existing neighboring energy firms. And as a consequence, we see way less resistance against a repowering of an existing asset compared to greenfield or brownfield development. And it is not these old, yeah, sure, it's a good idea, but not in my backyard discussion, right? That discussion was already held and decided a long time ago. And therefore, to conclude this risk perspective, repowering opens the door for institutional investors to earn their share of the development risk premium, but with a significantly reduced risk profile compared to greenfield and even to brownfield projects. Now, returns, on the other hand, are mainly driven by three factors. One is the increase in production we just talked about, and up to more than 4 times higher production on the same site obviously means utilizing sites with a much higher efficiency. Secondly, repowering obviously comes with lower cost. Don't want to really work around that now. And then there's a third factor that maybe is not that obvious, and that is about sourcing the assets you want to repower. If bought at market prices, one already must really pay a significant share of the repowering premium to the seller without the repowering even having been started. And to avoid this, the best strategy is to repower your legacy portfolio, your own portfolio. And that is exactly what we do with our Project Blue.
Yeah, no, that brings me to my next question, actually. So I understand CEE Group recently announced that Project Blue, and that seems to be a rare example of a bundling of existing renewable portfolios to be repowered in a new fund structure. Can you just talk about the project a little bit and what are some of the practical hurdles for deals like that?
In Project Blue, we actually faced the challenge of transferring 3 distinct existing funds into a single new fund. And these original funds varied significantly in terms of entire assets and asset allocation, maturity, investor profiles. Moreover, Project Blue then overcomes many of the obstacles a lot of closed-end funds investing in renewables are facing, like these 3 older funds. And a lot of more renewable funds will also face this in the very near future. You see, many closed-end funds that initially invested in such projects are nearing the end of the term. And traditionally, the end of a fund's term leads to simply divesting these assets. But on the other hand, it's just demonstrated that means to, yeah, actually for feed highly attractive opportunities. And then finally bundling different portfolios, like we did with 3 different portfolios, with a repowering potential actually increases all these outlines advantages further as yeah, it allowed to utilize on economies of scale. And naturally, such a deal faces a lot of practical hurdles. I mean, it's just laid out. It means transferring all the assets and all the accounts of the existing investors to a new fund. By doing so, you not only have to answer valuations questions precisely, but more important, you must align potentially diverging interests of very different investors, like investors with, for example, different time horizons, different appetite for risk, varying cash constraints, differing regulatory requirements on quotas, just to name a few. And finally, of course, such a complex transaction, yeah, naturally comes with increased requirements in terms of regulatory approval, yeah, and corporate law implementation.
It seems that balancing the need for renewable expansion with long-term sustainability goals and end-of-life planning is something that's becoming more talked about. I'm curious what you think, how far have we actually come in terms of combining recycling and sustainability with repowering, and what more do you think can be done to make this more common?
Well, that's a really good question because it's not really answered yet. But first and foremost, our strategy is not to recycle old assets, but to sell them. You know, that if you have all assets maintained like we did high above industry standard, that gives you the opportunity to capitalize on a quickly growing secondary market. Especially in emerging markets, we see an increased demand for older wind turbines and also for older solar modules. But when it comes to recycling, wind farms, for example, it is noteworthy that wind turbines and the towers come with a lot of valuable raw material, like, for example, steel and copper. For some kinds of wind turbines, up to 90% can really be reused, these raw materials. The problem still is rotor blades. This up to now cannot be reduced. There, the current state of the art is thermal utilization, and simply more or less burn them, and then the separated ash fractions are often used as inputs in other production processes, like, for example, fiber cement. I hope that got that right in English. Um, and then for solar, almost everything can be reused except for these old thin film solar cells. For these, they have specialized recycling companies. But maybe taking the future's perspective, nearly all major OEMs have already set themselves the goal of producing 100% recyclable assets in the future. Whether wind or solar, we're convinced, really convinced, that we will see massive progress in this area. Just as an example, by 2030, major manufacturers like Vestas, for example, want to go into production with 100% recyclable wind turbines, and then including rotor blades.